Hey, we're live with Moonshot number, I'm going to say 63. That's a complete guess. You have any idea, Jared, what number we're up to?
No clue.
63 it is. As you can see, I'm here with my friend Lee. We're going to talk about...
Lee.
Oh, that's right. Sorry. We have Roman here this week. Roman's our CTO. Welcome, Roman. Lee is on... Where is Lee? In the Gold Coast or somewhere, I think. He's living his best life with his family. Can't wait to be back on the Moonshot next week, I'm sure. But, you know, maybe if you do some fancy things and show us some tricks, maybe we'll have to...
I'm not that fancy.
Okay. Well, let's find out. Okay, so here we are, talk about markets and stuff. I guess if we think back a week, what's happened? We had some big dumps. We have some fairly quick recoveries. If I'm sort of looking at the markets, I'm seeing, you know, if you zoom out a bit, we bottomed on about 80K. We've been having higher lows ever since, which is in TA terms generally a positive sign. We've had some pretty interesting news articles that we'll talk about. I'm actually pretty excited to talk about these. What are your thoughts? Anything specific going over your mind in the last week?
Lots of people made lots of profit. A bit of market manipulation there.
Oh, market. Oh,
Yeah,
okay.
That's good.
Tell me about that. Who's manipulating what market, and how can I do this as well?
I don't think you can. You need quite a bit of capital to do it.
Okay.
So, yeah.
All right. Can I borrow some money?
Maybe somebody from our audience will
Yeah, okay.
give you some
Wealthy
capital.
benefactor.
Yeah.
We're only up to about 25 cents of donations so far, so
Okay, 25
Well,
cents. All right,
That's
man.
something.
So if I remember correctly, if we can go on I think it's Asta allows you to do 1,000x. So if I bet 1,000x with 25 cents, I could probably get that up to $25 maybe.
Yeah.
Yeah. Anyway, yeah. Okay, so I'm going to have to figure out a more traditional way of earning money. Fair enough. Okay, let's get into it. So early on, one of the bigger pieces of news this week is at least the CFTC have decided that they're happy to allow their regulated entities, i.e. the sort of organizations that they regulate, to trade spot crypto.
That's future exchanges, right?
That's right. So futures exchanges can trade spot crypto, which is kind of a weird thing, right? Because futures and spot are kind of different. Spot is usually like the physical, you know, in this case, crypto, you need to actually be able to deliver it, whereas futures, you don't generally deliver. You're just sort of trading on the future price, I guess. So the fact that they've basically said, look, we are happy to allow our entities to trade this stuff is huge, because it means these sort of the big boys in the crypto space, or the big boys in the trading space, are now allowed to trade crypto. It just gives a lot of sort of, you know, people who are maybe a bit more worried about dipping their toes into it. They're like, okay, hang on. A CFTC regulated entity is now allowed to trade this stuff. Therefore, you know, they've got to tick all the boxes and cross the T's and dot the I's and all that kind of stuff to allow them to actually do it. I don't know, this seems like a big deal to me. And I think we'll come back to that soon as well. One of the things I was wondering is how are they going to figure out custody, right? So if like someone like CME is kind of the obvious choice in this space, CME, they've already got, you know, a bunch of crypto futures stuff. So now that they're allowed to do the spot stuff, cool. But in futures, they don't have to worry about custody. And so that's probably the big tripping. Do you think they would do it themselves, or do you think they would outsource it, or what do you reckon?
Well, generally, we've seen companies like that outsourcing custody to Coinbase and Fireblocks. Well, Fireblocks as a technology, but we've seen outsourcing of custody. But interesting you mentioned this. I think over the last year, we've seen quite a lot of companies really getting into crypto. And this is yet another dot in the many dots over the last year that we've seen in basically TradFi embracing crypto trading. So I think we'll see a continuation of that happening and acceleration. So yeah, but definitely really interesting. I think a lot of TradFi companies, as you know, for example, IG is getting big into crypto, IG markets. I think a lot of these TradFi companies realize that they need to be in crypto, that this is the future, and are trying to really get into it now. And custody is definitely going to be a growing bit, because us as a crypto native company, we've dealt with custody from day one, so we're very comfortable with it. But yeah, as you pointed out, these future trading platforms, how do they do custody? the same thing with IG markets. How do they do custody? They don't know, but they're definitely getting into it. So
Yeah, so I guess one of their options would be to buy up some kind of traditional Coinbase style company. I would suggest they'd get Coinbase themselves, but it's either that or they hire a bunch of people who have the knowledge and actually try and build it themselves.
yeah.
I mean, sorry.
We've seen Fireblocks really dominate massively in this space. Fireblocks has some issues in terms of being complicated. So you really need to build the team to really take advantage of Fireblocks technology to do custody yourself.
You'd still need to hire a team basically using Fireblocks.
So I think actually there's some opportunities here in the market for people listening to us who want to do some business in crypto. A consultancy that basically wraps Fireblocks services in an easy to use way for some of these companies to to do custody themselves.
I guess I'd be pretty nervous as a customer wrapping Fireblocks. You'd have to have a pretty tight sort of relationship with them, because essentially Fireblocks are like, hey, that works pretty well. I'm just going to build that myself, and make it easier. Yeah, I mean, we've dealt with Fireblocks a lot, and you can kind of, at a high level, it can be very simple, but as soon as you want to start really getting into the nuts and bolts and understanding, how this bearer instrument really works at the base level, you could be there, for months and months learning and figuring out and understanding.
Custody is complicated.
Yeah, and I guess you're absolutely right. Like companies like Independent Reserve who've been doing this since the beginning, for over 10 years now. It's not something you can't just kind of give it to someone else. Exactly. It would just fall apart within weeks, because there's so much depth of knowledge and understanding that you need to build up. I know, when we hire new devs, for example, it becomes, it's not just you slot in here and just start coding. There's so much stuff that they have to learn, because there's so much knowledge that doesn't exist anywhere else. Like crypto has brought, or if we look back to, Bitcoin and the white paper sort of thing, it's brought together so many different ideas from cryptography and game theory and all this kind of stuff all into one really neat package. You can't just have one person understand every single bit right from, the floor to the ceiling kind of thing.
Yeah, exactly,
Yeah, anyway, I think it'll be a good opportunity if CME does come in, or a CME-like company, some kind of CFTC regulated company comes in and decides to, do like this spot crypto trading. It's going to be really interesting for the market, because essentially what's going to happen, the way I see it anyway, is they almost overnight, especially let's use CME as an example. If CME become like a spot trader, almost overnight, everything's going to go, okay, this is now the reference price for Bitcoin. It now exists on CME. It's not something we have to go to, get an index of, or go to Binance and Coinbase and Kraken and Independent Reserve, of course, and find out what the price is. Everyone's just going to go, nah, CME is the price now. It used to be like the futures price. They now do spot trading as well. This is the price for Bitcoin. The arbitrage between spot and futures is going to just crush. It's just going to get crushed, because everything is now available on this one platform. It'll be interesting times. Fees as well, trading fees are going to get crushed as people come to decide, there's this venue, CME, it's so well established. It's been in the market forever. They have so much trust. And now suddenly you can do this thing that you could only do on sort of more, not dodgy, but, less trusted, less companies with less pedigree. And I think it's going to be a big deal, actually. If
all that true, unless they do TradFi T+2 settlements.
Yeah, it's true. I mean, that is so for those of you listening, when one of the big differences between a traditional share trading house, and actually you probably can explain this better than I can, and a crypto trading house, is you've got sort of three parts to it. You've got the execution, matching, settlement, and clearing. There's these three different parts to the equation. In crypto, that all kind of happens in one go. There's no separation here. Independent Reserve, for example, and any other kind of centralized exchange you find out there, don't differentiate between these parts of the equation, because it can all happen at once. It's all on a computer. It's just a database that gets updated. You don't have to worry about how it used to work in the past. Whereas when you're talking about a more traditional share trading company, there's different entities that do clearing, different entities that do settlement, different entities that do the actual execution, custody as well, exactly. And each sort of settlement, each entity is regulated separately and has to be separated, as part of the regulation. And therefore there's just all of this friction and delays in any kind of process. And so when people talk about, and I've spoken about this in the past as well, when people talk about spot trading, what in crypto terms, what they're talking about is physical trading. So we're trading the physical underlying crypto, for example. So with Bitcoin, spot trading, you're physically trading Bitcoin. I can withdraw the Bitcoin if I want to trade it in the first place. I have to deposit Bitcoin. But spot actually means T+2. So it means a spot trade is a trade where you book in a trade on... Anywhere really, spot trading is T+2. In crypto, it's kind of just been changed to mean physical.
Instant.
But spot trading in crypto is instant because everything in crypto is instant, right? So you have this weird situation where in TradFi you're waiting 2 days for a spot trade because you place the trade and then you're only expecting it to be delivered 2 days later, because back in the olden days when I bought 50 tons of corn, I don't expect the corn to turn up at my front doorstep the same day. I got to give the guy a couple of days to get the trucks or the carts or whatever it was that he was delivering it in.
It is T+2 because of this. It's a traditional process of 100 years old, right? And then a process that's been there before the internet, before any computers. Yeah. So they've kind of like taken that, made it run on modern infrastructure, but the process is still old.
Yeah,
but crypto, completely new. I've had somebody ask me the other day, how much do we charge for price feeds? And I'm like, we don't.
Yeah.
So...
it is. And there's so many other things like trading 24/7 that doesn't exist in the traditional share markets, right? You literally have guys in a room shouting with the tickets that are trying to do a trade.
But what's interesting is, NASDAQ, the CEO of NASDAQ, she indicated that NASDAQ is going to go 24/7 eventually. And I think with essentially what the markets are looking at with where we're going is... tokenized shares.
Yeah,
right?
For sure.
And eventually, I think in the future, there will be basically ICOs or IPOs, right? Where companies will do IPOs, will use maybe NASDAQ technology, them as a primary listing market, but they will issue their own tokens, which would, be traded on DeFi, NASDAQ, anywhere. So I think that will be really interesting. And of course, 24/7.
Yeah.
Do you think this will push the traditional stock market to go 24/7?
Yes, we're going that way.
Yeah, and I think I reckon that was always the vision, because people understand these days 24/7 in a global world where everyone's connected across the universe. Working from 9 to 5 makes no sense. You're just cutting yourself short of any possible trades, right? So these trading companies want to go 24/7 because it just means it's more opportunity for them to make money. Yeah. But
sorry to interrupt. I just remembered something. Wasn't it a few years ago that Bitcoin trading has basically been live longer than New York Stock Exchange?
Oh, really?
Because of 24/7 trading?
Surely not.
Yeah. Like in 10 years, when you add up all the
I guess it's 3 times longer a day, because you got, instead of 8 hours, you got 24, then plus an extra 48 hours on the weekend.
Yep.
Gee, really?
Yeah.
Can we get? Yeah.
Maybe somebody can.
Can we get someone to fact check that?
Skynet.
Yes, where's Skynet? We need to fact check.
He's here.
I guess my point there was, we're going. We were always going 24/7. I think it just makes logical sense. It's a logical conclusion to this, to the path we're on. However, I think a lot of these trading houses are probably looking at crypto now as the way to do that. Whereas before it was just like, we'll figure it out, with the technology that we have. Yeah. But now it's like, we can actually use crypto rails in this sense and go 24/7, because look, the crypto exchanges have been doing it now for 10, 12, 13, 14 years or whatever. It works fine. No one's, liquidity is thinner, sure, but that thing will average out, I think, in the long run.
Tokenization is going to be very big. 26, 27.
Yeah, I'm excited. So Hyperliquid are doing a bunch of that stuff at the moment, which, I always feel underweight on my hype bags. Anyway, we've talked about this for a long time. I think, but I think it's a very interesting topic. Like the fact that CFTC have basically stumped up and said, you know what, SEC have taken too long on this stuff. They've been, trying to corner the market and be really like roughhousing with everyone. Admittedly, that hasn't been the case since Trump took the seat, but CFTC have basically come in and said, all right, you guys are taking too long. We're going to allow spot trading to happen. What are you going to do about it, kind of thing? And I think it's going to be a big deal.
I think CFTC has been a little bit pro-crypto for a while now. Like, they've been a lot more pro-crypto than...
It would appear that
SEC.
way. I agree. However, like the way regulation rolls on and off, it's difficult to say. Hey, can we pull up the first image that so I thought this was an interesting image and like a real cautionary tale. So if you look at here, this is the Bitcoin trading, how Bitcoin traded over the weekend. This isn't the price at the moment. This is just over the weekend.
You got me excited.
Yeah, sorry. But what we're looking at here is a real sort of crash and then pump. And what the cautionary tale here is that don't trade leverage over the weekend. So if you look at the price, it's kind of trending down and then it eventually dips from about 90K down to sort of 88K. During that period, $177 million worth of longs got liquidated. Then moments later, it pumped up to something like 91 or 92K and $75 million worth of shorts got liquidated. So this was just and it's not even like they're not even trying to hide the manipulation in the market here, right? People on the weekends, markets are thinner, market makers pull back, there's less depth on order books, and this kind of stuff can happen. And it's not to say, this is a problem with Bitcoin. This is just a problem with people doing silly things when they're trying to trade. Like Bitcoin will trade wherever it trades, but because the markets are thinner, things like this can happen. So yeah, I thought that was quite interesting. People just going long, getting liquidated, then going short and getting liquidated, and they're just extracting all the money from the market basically. But we need to reduce leverage. This is my overarching message to the whole market: reduce leverage, stop being silly. If we're ever going to pump out of this, I like to call it a mini bear market. I feel like I don't want to say a full bear market because that's just scary kind of verbiage, but mini bear market seems fine to me. It's like a mini bear market you can recover from in a couple of weeks or a couple of months. If we're going to pull out of this mini bear market, we need people to stop using leverage. Actually, this is financial advice. Stop using leverage.
I don't think you can say that.
Yeah.
What do you call a mini bear market? Is that like a cub market or something?
Oh, yeah.
Like that?
Little bear cub market. I like that.
The interesting thing is, in the last few bear markets, well, the 2018 bear market, I remember people were basically like, yep, this is it. A lot of people quit crypto. A lot of people thought that will be the end of it. Lots of projects that raised money basically folded, and people just went back to their non-crypto jobs.
Yeah.
Right? 2022 was a little bit different. Everyone's like, okay, we've been here before. Continue building. Now, I don't think people are even thinking about the price.
Yeah.
So, definitely not a bear market.
Okay.
Yeah.
You heard it here first.
Yeah.
Not a bear market. This is just temporary dip.
And I do think, not financial advice, 2026 will be very, very big.
Okay. We can talk about that in a bit,
okay.
actually.
We'll
There's
get
some
to that.
news about that. Let's talk about the Fed. So the Fed always turns up in these things. I feel like, when prices are down and there's no real good sort of catalysts on the horizon, everyone looks towards macro and goes, save us, Daddy Powell. And so we're hoping for a rate cut. Obviously, this is coming up in the next couple of days. I think we've got the announcement where FOMC meets and does a thing. Everyone's basically agreed that 25 bips is going to be the number, which kind of makes me think, okay, if they do announce 25 bips, which is cool, we're cutting rates, there's never a bad thing to cut rates, but it's all going to be priced in essentially. I don't think we're going to we might see like a temporary bump and then it'll go down again and we'll wobble around for a bit and then probably end up basically where we started. Any thoughts on macro stuff?
Unless they drop 50.
Yeah,
that would be great.
I mean, there are a couple of the committee officials talking about 50. Obviously, it's pretty unlikely. I think it's over 90% in terms of like poly market odds is talking about a 25 bip cut. But
I think that's been priced in.
Yeah, I mean, there's always hope on the horizon. I think what was interesting at the moment though is they don't have any stats. So the government shutdown, longest shutdown in history from the 1st of October to I don't know, sometime in November. So they didn't get any stats from the Bureau of Labour Statistics for October. And as of a few days ago, the Bureau of Labour Statistics basically just threw the towel in and said, we're not going to do it. We're just going to roll the numbers into November, and we'll give you those November numbers in January.
Right.
So the Fed have now gone, oh shit, we've got to make a decision on this rate cut using September inflation numbers. Basically, they don't have anything up to date. So everyone's pretty comfortable with where they're going because it's not like there's new data is going to come out to adjust the position. Everyone has seen these September numbers. The Fed kind of has only one real decision to make here.
Yep.
Or they've only got one option really, which is the 25 pip rate cut. But what is also interesting is it seems like there's a lot of pressure building up in the Fed themselves. So as we all know, May next year is when the next Fed Powell runs out of steam and they choose the next one.
He's out.
He's out. Trump is probably going to do something crazy, which is completely unlike him, and put some guy in that's pro rate cuts because obviously he's been extremely pressury about cutting rates over the last 6-12 months. We have seen a few rate cuts obviously from the Fed, but apparently we've had the most number of dissenting votes from the committee officials ever, basically. Well, not ever, but in the last something like 3 or 4 rate cuts, we've had as many dissenting votes as we have had in the last 47, like the previous 47 decisions. It's a number. Usually the Fed is really tight. Like these guys all chat internally. Powell whips them all into shape, and they all come out with a clean view. And it's just not happening recently. There's a lot of people going, we don't really like what Powell's doing here. And to me, it seems like Powell is relenting a little bit under the pressure, even though he has stood very strong, if you ask me, compared to considering all the pressure that Trump has put on him. He has still come out with a few rate cuts where bunch of the other officials have said, no, we shouldn't have done that. Like inflation's still too high. We need to still keep the cash rate up and beat it down first. I guess it makes sense. He's doing what he can, and he's kind of almost out of here, and the crowd's getting a bit rabbly and rowdy. Yeah, I don't know. I feel sorry for this guy. He's probably under enormous pressure, enormous strain.
I guess this will be his last gig. He's got nothing to
there's
lose
a
as
kind
well.
of high court challenge where Trump's trying to remove an independent member of a committee who votes Democratic, and that's coincidental. And if they win that case, then it's open season for him. So everyone's looking at this case at the moment.
Is that the one where she was committed, accused of fraud of something? Yeah, I remember
and
that
it's
one.
gone all the way to the Supreme Court. So
and she's like, yeah.
The judge probably won't rule in his favour, but you never know.
Yeah.
So if the judge does rule in his favour, then it's bull market early.
Whoever he wants. I don't like
Yeah.
You're fired.
Well, so she goes out, then he appoints someone else in who's obviously pro Trump, and then they've got this. Suddenly, it's not as balanced in in the committee anymore, and he's got more people on his side, and anyway. But I mean, it almost feels irrelevant because once May comes in and he gets to appoint the next person, it's obvious he's going to appoint some friendly.
Yeah, for sure.
It's going to do
just
exactly
quickly,
what he wants.
we've got some fact checking from our friend Skynet.
Oh yeah.
Yes, let's have a look.
BTC trades 8,760 hours per year, while the New York Stock Exchange trades 1,638 hours per year. So that means that the stock exchange has had a 233-year head start on Bitcoin, but in 33 years, Bitcoin will catch up.
Okay.
What about NASDAQ? Maybe it wasn't stock exchange. Let's have a look.
We'll have to
NASDAQ is...
ask Skynet to do
Get your
Skynet.
calculator out
Yes.
again.
Stock exchange is one of the oldest... New York Stock Exchange.
As we discussed last week, I only have so many fingers. And
10, right?
He's also commented as well, an unreleased version of Grok 420, 4.20, traded tokenized stocks on Hyperliquid and outperformed all other LLM models and returned a 62 profit over 2 weeks in Alpha Arena competition.
Yeah, I saw that.
Yeah, that's great.
That's crazy.
It's so
crazy.
it's just these large language model competition, kind of the arena is just so fascinating to watch. ChatGPT was so dominant for such a long time. Then Grok came out and you got to believe the hype because who else are you going to believe? Grok sort of came out. They had Grok 4 Lite version, Fast 3.0-2 or whatever. Then last week I heard, Gemini 3.0 Pro or 3.5 Pro or something. Everyone's like, no, this thing is the best thing ever. Now Grok's actually making real money. It's just, you just can't go wrong. They're all, it's like those, the things where everyone's quabbling over a couple of percent here and there, but the reality is you could use any of them and you'd be doing, you'd be fine.
Well, what's interesting for me is to know what prediction models these LLMs use to trade, right? Are they trying to do technical analysis? Are they looking at, like X and what people
sentiment,
market sentiment essentially, or like what people are talking about, and kind of front running the hype. Do you know what I mean?
Yeah. So last couple of weeks ago, we spoke about one of the there was a project called N of One where they basically set up Grok, Claude, ChatGPT, Gemini, and DeepSeek, and then there's one other which I didn't actually recognize, and they basically gave them the same input. So it was purely on TA. And they said, go for it. Here, you got $10,000 each, trade it. And it was pretty interesting. Like you could actually see their decisions as they were trading. They were saying things like, I've seen this before. I'm not going to trade here. And this looks like a good spot. I'm going to set up a limit order to do. You could actually watch line by line as they were rationalizing what trades they were going to make. And none of them did very well. Grok out of the gate went crazy, and then like everything basically reverted back to the mean kind of thing. Yeah, something along the lines of luck. But yeah, I think like longer term, they were all under the $10,000. Like they weren't making money off this thing. But the only inputs was TA, so they didn't have any kind of market sentiment. They weren't able to look at Twitter feeds or Fed announcements or anything like that. I'm wondering if this Grok 4.2 unreleased has that kind of information, because you need it, right? You can't if you're only trading on TA. You're blind.
TA is essentially horoscope for men.
Yeah, exactly. I mean, and not clearly, like if everything's under $10,000, they're not beating the mean. Like, and what was it? Oh yeah, so part of the trade was one of the bots just bought $10,000 worth of Bitcoin, and that was kind of the benchmark. So if you just hodled basically, and none of them could beat the hodl. So, but I'm keen to like this supposed Grok 4.2 that is BTC trade more cumulative hours than Nasdaq.
Yep.
Hey. Look at that.
It was.
Nasdaq wins. So super keen on understanding this Grok 4.0, and this becomes just a yield product in the end, doesn't it? Like you put $10,000 in, you pay $100 a month, you earn 15%.
If everyone starts using it, the market becomes more efficient, so you stop making money.
True.
Yeah.
N of One is Alpha Arena competition, still trading now. Yeah. Yeah, and everyone was really, like, it was just such a cool idea. I really liked it, even though it didn't seem to go so well. But, early days, I think they can also improve inputs. They can improve the prompting. They can improve, like, there's not just the, adding market sentiment and that kind of stuff to it. Yeah. Anyway, let's move on. There's more stuff we can talk about in the Fed, but I think we've burnt that one out. So Strategy bought 10,000 Bitcoin.
Again. Is that even news?
Not again. It's news for me, because if you look at the last sort of 2 or 3 buys, this is like 10x what they bought before. So the last buy was like 100 Bitcoin. The one before that might have been like 130, and now they've bought 10,000.
Were they saying just last week they were probably going to sell some?
Well, yeah, this is the thing. They didn't say they were going to sell. They just said it is technically a possibility if the scenario were to arise. Yeah, exactly. And it's like, psych, we're buying. Yeah. No, I thought this was interesting because, things were looking a bit dire last week, especially when the price is dropping down to like the mid to low 80s. Things aren't looking, like the price is going in the wrong direction. People are talking about, all these DAT companies having to unwind their positions, and then Strategy come out with this whole, hey, where, it's possible that we might have to sell, which is such a shift from the previous kind of information that's come out of them. Like Saylor has been such a bull for so long. He always talks about you never sell. What you do is you sell your house and buy more Bitcoin. You don't sell Bitcoin. You never sell Bitcoin. And then, and to be fair, Saylor himself didn't come out with that news. Was it Fong Li, I think the CEO's name, talked about it. Talked about the possibility of it being technically a lever for them to pull. But then, they come out and buy at 10,000, which is like, hang on, weren't you guys sort of not in trouble? But, there's a lot of talk, which really, I think is such a strong sign for the market. Because I think if Saylor sold, like if Strategy sold, that'd be a big deal. Imagine that. Even if he sold like 100 Bitcoin, that'd be a big deal. Because everyone would just be like, well, hang on, you can sell? Like, and because they held so much. They held 660,000 Bitcoin or something like that. Huge percentage relatively. Yeah, but I kind of found it interesting because if you look back in the previous announcements where they bought 100 Bitcoin and 130, it was all like a reply to some other tweet they did. It was all kind of hidden.
Yeah.
And then they did the 10,000. It's like, the big famous tweet and Saylor retweets it. And, they're getting right out there in the news, making sure everyone knows that they've bought another 10,000 Bitcoin. But anyway, so this is good news. And I think, it was definitely, the market was probably trying to psych everyone out with that. Not the market, but, people were saying that the selling is now a big deal. A lot of people were talking about the selling. Strategy themselves were really trying to talk it down and say, no, guys, like this is just a thing. It's a possible option for us if we had to sell to pay, the interest that we owe people on these notes that we've issued. But here they are. Not only did they I think they set down $1.44 billion as like a safety net kind of thing. So if they needed to, they'd start using this $1.4 billion to pay off the interest. But not only that, they've just actually bought another 10,000 Bitcoin. So that's pretty bullish. I mean, I've been for a long time now, I've sort of been a bit nervous about Strategy. I think they own too many Bitcoins.
I think they do as well, yes.
I think they need to stop buying and just chill out for a while. Let some other people buy some Bitcoin. And I was kind of like, I was loving it when they were just buying like 100 here and there because I'm like, lol. I wish I had 100 Bitcoin, but that like it was kind of funny. But then they bought 10,000 again. I'm like, oh, okay, fair enough. You win.
One thing that a lot of people don't remember is Strategy is actually a revenue generating. Actually, it's a profitable business. With their data analytics and whatever
software
else,
stuff. So we spoke about this a couple of weeks ago. Their revenue is something like $500 million a year. Right. But if you look at that compared to how much Bitcoin they own, it's something like 2% or it's negligible. And so it was interesting when all this FUD, this news about them selling was coming out. Oh no, it wasn't. It was the news that the S&P or one of these indexes, I can't remember which one, was saying that they were going to, we've got to get rid of Strategy because they're just a fund. They're not actually an operating company. Yeah. And then Strategy came out with this news saying, no, we've got $500 million of operating revenue. Like we are a real company. But then it just gets dwarfed in comparison to the amount of Bitcoin that they hold on the balance sheet. And so, yes, they have a software company, but it is a drop in the ocean compared to the Bitcoin they own. They just have, as we talked about just before, they just got too much Bitcoin. And so I don't think it was really an argument as to why they should be kept in the fund. In the index. I think they do operate like a fund personally. It seems to me that they probably shouldn't be in the index because it's not really what the index is about. Anyway, I don't know if there was any. I think they're still making the decision in January. I think whoever it was.
That would actually be bad for Strategy and Bitcoin.
100%. If they got removed from the index, there'd be a whole bunch of forced selling because people would have to unwind their Strategy positions. It's not part of the index anymore. It'd be really bad for Strategy. But I guess they'll see it coming, so at least they've got some warning and maybe they can do something about it.
Insider trading.
Well, I mean, it's not insider. Everyone knows it's getting removed from the index, but at least, maybe they could do a thing where they say, look, yes, there's going to be a bunch of forced selling of the shares. We're going to buy them. We will buy all the shares. Like, imagine that.
If they have the capital.
They'd need the capital, obviously. Well, they do. They just sell a bunch of Bitcoin. It's fine. No. I don't know what'll happen, but if when that happens, and it seems likely, get ready. So you still think you're still bullish 2026? This Strategy having some forced selling?
Well, if Strategy does forced selling, it'll be bad. Kick off a bear market.
Yeah, not. They don't necessarily. I don't think they'll be forced to sell their Bitcoin necessarily, because really it depends on the Bitcoin price. They just need to be able to repay their interest. That's kind of what matters at the moment. They don't really care what Bitcoin's worth. They're just going to keep buying more. But if their shares go down, the share price gets down because of the forced selling, the MNAV falls under 1, that's a real, a signal to the market. And people are like, oh, crap, the MNAV's under 1. The MNAV fell under 1 back when we were in the low 80s. And that was the first time it's ever gone under 1. That marked the bottom, to be honest. Everything kind of bounced off there. Sentiment was washed. It was a real capitulation kind of moment. And we've kind of only been up since then. Anyway,
I think the crypto market is so correlated to the liquidity, global liquidity right now. That
sure.
It's just that.
Well, talking about liquidity, QT, quantitative tightening has ended. QE hasn't started, but we're hoping sort of in January the Fed starts doing some buybacks, and so from what I'm reading, they're not going to be buying the coupons. They're just going to be buying like the Treasury notes, I think it is, which isn't as good as the coupons. So back in 2020 COVID times, things were looking really bad. Fed stepped in and were like, right, we'll save the day. And they were doing something like $800 billion a month or something crazy that they were buying. From what we're seeing at the moment, the quantitative easing that's going to happen is something like $20 billion a month. So it is nowhere near the levels of 2020 QE, but it's the opposite of QT, which is what we've been having for quite a while now. So it can only mean good things. Yeah, I think there's a few different things. As long as strategy doesn't sell, it should be okay. Next one. 4-year cycle. What are your thoughts on the 4-year cycle? There's a lot of chat about 4-year cycle ending. This is the end, super cycle only, etc.
I think we haven't had a definitive kind of confirmation whether it has or not.
No.
I mean, the 4-year cycle is really the liquidity cycle, global liquidity cycle. And I think it's been stretched these last 4 years. So I think we're not at the 4-year bottom bear market. I think we're just starting to see QE happening. So another year or two.
Okay.
Let's see what happens mid next year with interest rates, and see how much tightening they will do. QE they will do.
Yeah. Well, I'm really looking for like a prediction here, because I don't want to just like in 5 years' time we'll look back and decide if it happened. No. Let's put your stake. I feel like you're definitely a 4-year cycles over kind of guy.
Yeah, I think so.
That's what I'm hearing. Okay.
It's definitely the highs and lows have definitely been smoothed out.
Yeah, and I think that makes, as the market cap grows, this kind of we get this institutional investment, institutional participation. Definitely that kind of stuff you'd expect to see.
We could see like a 7-year bull market.
I always think back to the ETFs. When the ETFs were launched, there's a bunch of stats coming
Which
out.
ETFs?
The Bitcoin ETFs. When they were launched, and this is 2 years ago when they came in, sort of January 2023, I think. When they came in, there's a lot of stats around other ETFs and performance and stuff. And the big one that everyone loved to point out was the gold ETF. Yep. So when gold was launched back in the early, when was it, 2010 or something like that? I don't know, maybe earlier, 2000s. There was an 8-year bull market in gold that basically followed. And obviously it wasn't up only. There was, it ground its way upwards for 8 years. And everyone's like, oh, it's going to happen in Bitcoin. Anyway, I mean, we've done some great things since that ETF. I think the ETF launched and the price was in the 40s maybe, somewhere around there. So yeah, I think we are showing early signs, but yeah, is a 4-year cycle over? If the ETF has launched some huge 8-year bull market, that'd be awesome. But you're absolutely right. I think we need more data at the moment. What have we got? The discussion about the 4-year cycle is not resolvable because there is no universal agreement on what the cycle driver is. It's just assumed everyone thinks it's anchored on the halving. I'm not sure if I agree with that. I think back in the early days when you were earning 50 Bitcoin per block reward, a halving made a big deal. Or it was a big deal rather, because it was such a large percentage of what of the supply to the market. These days, I think the halving is almost irrelevant. It's really sort of circling around macro cycles, as you say, liquidity, like M2 money supply, stuff like that, and also the political cycle as well. That always seems to get involved. Presidents love to pump liquidity and pump markets and just before the election time, and that's, to me, that's what it's really kind of coalescing on. Yeah. That cycle is also a 4-year cycle. Obviously, US presidents get elected every 4 years, so I think there's a lot to be said with that. I don't. And my personal belief is the 4-year cycle still exists, at least right now. We haven't seen any reason for it not to exist yet, but I don't think it has much to do with the halving. Do you have any thoughts?
Yeah, I think because of the way Bitcoin mining works, it's a very predictable business. which is why so many miners are listed, right, on Nasdaq, etc. But so I think, you know, you could really understand how a mining company operates, because you can basically prepay for a lot of electricity. You can prepay for miners, etc. So I think the halving is far less impactful than it used to be. You're right on that. But I think because of the price has grown so much, you know, halving still has quite a lot of impact on the market.
Psychologically or actually mechanically?
No, I think actually mechanically, because the miners do still have to sell. That Bitcoin still goes into circulation. It has to be absorbed by the market. But I think it's just far less impactful. Does it drive the 4-year cycles? I don't think so. I don't think the bear bull markets are now determined by the halving. They're definitely determined by the global liquidity.
Yeah, okay. And to be... sorry, Skynet, possibly I was aggressively agreeing with you there. Looks like Skynet actually agreed and said it was much less, the supply cut is much less relevant now, which I think we both agree on. Okay, so the next thing I want to talk about kind of harks back a bit to, we forgot to do the clapper, oh no. Next thing we wanted to talk about was Charles Schwab. So Charles Schwab has finally agreed to allow crypto trading, which is actually massive news. So if you look at sort of the big boys in the sort of brokering trading game, we've got Fidelity, we've got BlackRock, we've got JP Morgan, we've got Charles Schwab and Vanguard. Fidelity are crypto bulls. They've been in it for a long time. They're early. We love Fidelity. BlackRock obviously kickstarted the ETFs. No one cared until BlackRock got their ETF through. and that was massive
as well on crypto.
And Larry Fink loves tokenization and things like that, and obviously Bitcoin. Vanguard were always anti-crypto, but they've kind of begrudgingly, they're dragging their heels and they've gone, all right, fine, we'll allow our customers to trade crypto now, on the proviso that they're sophisticated and blah, blah, blah. What else? JP Morgan, Jamie Dimon has been very anti-crypto for a long time, probably still is, but I think he's commercial and he's saying, look, even though I think crypto is a scam, everyone seems to be making a bunch of money off it. Our customers are clamoring for it. We better allow it. So they've...
And he's pro tokenization and stables.
Yeah, that's right. So they've put a lot of money into building stablecoin projects and rails, and they've got their own internal JP Morgan coin or whatever it's called, which seems a bit more like, to me, that's sort of a marketing exercise as per not really a technological innovation. But either way, they've been in the game for a little while now, and we kind of cheered when they got in. We cheered when Vanguard finally turned around. Charles Schwab was the final piece of the puzzle that hadn't done anything for a long time. They've been for years warning their customers about how crypto is too risky and you shouldn't touch it. For those who don't know, Charles Schwab is like this huge trading brokering firm that you'll find like a lot
wealth
of
management and advisory.
Wealth management, a lot of traditional finance, a lot of retirees, school administrators, all that kind of stuff. Like the really sort of traditional people use this thing for their trading, and now you can do, well, I don't know right now, but Charles Schwab basically announced this to say that you can do crypto trading on them. I think this is huge. This is basically the final domino has fallen. If you're sort of looking at it from that perspective, and we now have all of the guys allowing trading on crypto. The fact that Bitcoin is going to be there on the screen next to your traditional instruments that you can trade. That's even if like 0.5%. So Charles Schwab managed something like $12 trillion. Like they have this kind of this under management. If 0.5% of that go in, a year, like that is huge numbers. That's going to be massive. Anyway, I think it's going to be, like the ETFs when they first came in, everyone's cheering, and obviously like at the beginning, you can't have outflows from something that doesn't exist. But as soon as there are inflows, you're going to get the ebbs and flows. People are going to do the trading because that's what people like to do. They want to buy low and sell high, and so we're still going to get, it's not just going to be one way, valve. I think there's going to still be a bunch of ups and downs that come through this, but yeah, I think it's massive. What else do I have to say about this? Oh, Charles Schwab famously do zero trading fees as well. So I think this is going to be really interesting for the market.
Did they make money, Nick?
Well, That's a good question. They'll have to make money on the spread, so they'll have a spread in their pricing. With something like Charles Schwab, where you're paying no crypto, no trading fees, it's not going to be something like a two-way order book where you can see exactly what the other person you're trading against has. It's just going to be like an opaque market where there's like some kind of inbuilt spread. Anyway, I think this idea of zero trading fees, even if it is a fallacy, as you say, there's always a spread. You're always paying someone. You're not getting zero for free. It's going to be interesting for how this affects the market. So big players out there that are quite comfortable charging large fees are now going to have to rethink how they do it. I think while the market is less mature, you have the bandwidth to charge whatever you want, kind of thing. When you're the only venue that someone can go to, you can kind of charge these outrageous fees. It's not outrageous, but you can charge a larger fee. And now we're going to see a real compression there, I think.
Yeah, a little bit. Yeah, I think Charles Schwab and shops like that, they have brand loyalty. Quite a lot of their customers would have been with them for a very long time.
Yep.
We see that a little bit with Independent Reserve, right?
Definitely.
Our users are pretty sticky. They like us, the brand. So it will be the same with Charles Schwab, even more so because, think about this, right? If you've had an account with them for 20 years, 30 years, right? Are you going to switch to somebody else to get better fees? Do you know what I mean? Like if you're with BlackRock for the last 10, 20 years, psychologically going, I can switch to Charles Schwab, get zero fees there just to buy some Bitcoin. I don't know.
Yeah, and if everyone else already offers it, you're right. I don't think they're going to see a huge churn because of this, but they're really just playing catch up. They're just trying to compete with their competitors. Yeah. I think what's interesting here is we can kind of tie this back to the CFTC thing as well. So CME are now allowing crypto. The CFTC are saying, hey, if you're a venue, you can trade crypto. So we've got something like the CME maybe opening up actual crypto trading. Yeah. Charles Schwab, I'm not going to say it's 100% going to happen. I don't know, of course, but it's very likely that Charles Schwab would then use something like the CME to trade their Bitcoin. So it's kind of the pieces of the puzzle are kind of falling into place here. Because if CME didn't offer Bitcoin trading, then Charles Schwab would have to find some regulated. They want to interact. They want to deal with another company that is at their level of regulation and rule following and all that kind of stuff. They want to deal with an adult in the room that's got all ticking all the boxes, and CME would definitely do that. These guys have been playing the game for a long time. Yeah. They are fully regulated by the CFTC. So if they can get a player, if Charles Schwab can get a player like CME, then that kind of like the top to bottom kind of gets filled out there, if you ask me.
I think this is another point that crypto is really going mainstream in TradFi. In fact, we'll probably, in a few years, we won't use TradFi. It will just be all crypto fi. Just fi, yeah. Just fi. Just fi and DeFi, right? Yeah, because all the TradFi will have crypto integrated in one way or another.
Yeah, it'll be one of those the classic sort of saying where you'll end up using it, but you won't know you're using it.
Yes, that's right.
Yes. It'll coalesce to that. What else? Gee, what's the time? Oh no, we've got time. Next thing I want to talk about. So, BlackRock have listed a staked Ethereum ETF. So this is something they haven't done before. Previously, you've got the FA instrument you could buy, which was just normal Ethereum. Now you can buy a staked Ethereum ETF. Do you think that in this scenario, everyone would just move over to why would you not be putting your money into a staked Ethereum where you can earn yield? So I guess, for those of you, again, sorry, let me just break it down. A staked, if you're using a staked ETF, it means that the underlying asset is getting staked and earning fees on the network, and you can basically earn a yield on this ETF. Whereas a normal, like the Bitcoin ETF, for example, it's just like a capital investment. You're putting it in at one price, hopefully pulling it out at another price. Yeah,
and same with just a normal Ethereum ETF, right? They're not allowed to stake it, so you're not earning any yield. Look, I would definitely switch to a staked Ethereum ETF if I was in the Ethereum ETF. I mean, if you're holding ETH, you should be really staking it. But it is more risky, right? You are adding risk. You're not getting the reward for nothing. So that's one thing to consider.
Yeah, I think you'll have a scenario, I suppose, now where that BlackRock, the biggest ETF issuing company on the planet, has an Ethereum ETF and a staked Ethereum ETF, and you'll be able to see the price differential between these two, right? Because they'll both have shares, like equivalent share pricing, and you'll be able to specifically look at that and go, here is the arbitrage, here is the risk premium for owning, for staking versus not staking, and it really like articulate that to the market. I think that'll be pretty interesting to actually see where the equilibrium comes out, and also be interesting to see how many people flip over from the non-staked to the staked, because I think a lot of people will. In my experience, old people love yield for some reason, and old people buy ETFs. I don't buy ETFs. You don't buy ETFs. We're comfortable buying the underlying physical and custodying ourselves. But old people who aren't comfortable with that, which is totally fine. I will eventually be an old person as well, and I'll buy my ETF. I'll know the moment I buy the first ETF. I'm like, oh crap, I'm old. But they don't just want to own Bitcoin, right? But a lot of old people are like, where's the yield? How do I earn money off this thing? If it's just a pet rock and I have to sit there and use it as a capital asset, it's not interesting to me. I want to earn yield on my investment. And so I think the idea behind a staked ETF is really interesting, because old people are going to go, there it is. Now it makes sense to me. Yeah. They're going to put some money in that. Solana is obviously another obvious choice. You can earn yield on Solana. I think so at the moment, Solana's yield is like twice that of Ethereum, I believe. It's like...
Well, I think Solana is actually generating a lot more trading fees on, or at least it is generating quite a lot of fees. Maybe not more than Ethereum, but it's generating a lot of fees.
But pretty surprised it was more than Ethereum.
No,
but maybe per transaction or whatever. Even then.
It's transaction fees plus MEV fees.
Yeah, okay.
All of the trading, that degen trading that happens on, I guess, Solana. People don't use slippage protection maybe anywhere near as much trading in coins as they do on Ethereum. So.
Yeah. Anyway, I think the idea behind BlackRock doing a staked ETF is fantastic. I'm super interested to see how it turns out, like how many people hop on board. And I think like a bunch of old people are going to buy it. That's my take. Talking about Solana, let's get down to Solana and we'll come back to other stuff. So Solana validators down 50% since their all-time high. They were, I think, at the top.
Number of validators? Or number of staked SOL?
Number of validators. So number of actual people running the physical machinery to validate transaction was at something like 2,100. Sorry, Jared. Oh, yeah, we've got a graph here. You can see, I think it starts up.
I wonder what kicked off this decline.
Well, I'm glad you asked.
Yeah.
So
profitability?
Yeah, what he said. Reduced profitability. Yeah, so I think it was up at something like 2,100 up at the peak. We're now at about 800. So we're down more than 50%. That's a big drop. As far as I can tell from my deep research I spent over the last 13 minutes or so before this meeting, figuring out what was going on, it doesn't have anything to do with people getting scared of Solana or the price going down and people leaving the industry. It's more about emissions are going down, which makes validating more expensive. And the validators just the ones that were just barely breaking even are having to turn off. So there's sort of three things that are involved. How many people you've got validating on you, how many people have staked their Solana on your validator. Every validator has to post a transaction on every block. So it's actually quite expensive ongoing. You can't just sit there and walk away and be validating. You actually have to post a transaction. You'll like vote. You have to vote, I think it is, on every block with Solana. And there's a third thing I can't remember right now. But basically it's becoming more and more expensive to validate and essentially centralizing, which is not great, centralizing the validator set because it's becoming more, you just need to be running it at scale for it to make sense. The one thing there we go. It requires, thanks Skynet, it requires $20 million worth of Solana to run a validator. I'm guessing he means to run a validator at break even. Which is huge. It's because it's all these sort of hidden fees you don't think about. One thing I was reading about is Fire Dancer. Do you know much about Fire Dancer?
They've been talking about it for a very long time. It improves efficiency of Solana transactions, makes it a lot faster, right?
Yeah, they're parallelizing a bunch of stuff. They're reducing the overhead requirements. There's all this fancy technology that's been
But
built.
it hasn't been released yet. They've been
No,
talking about
so
it for a very
they're
long time.
they're in mainnet at the moment. So they're like beta
DevNet
testing the sorry DevNet. They're beta testing the final version in the development environment. So it's I think the current existing Solana validator is a Rust, written in Rust. The new one's in C++. It seems like it can only do good things. Like if they release once this thing's up and running, it's going to allow people to have. There's going to be multiple validator software validators available, multiple software stacks. Previously, currently, if you're running the Rust solution and there's a bug, the whole network goes down.
But my understanding is Firedancer sits on top of the traditional, like it's backwards compatible, but it's like a.
Obviously it's compatible with
it can
the network,
do different
but
things.
so there's different layers to it.
Yeah.
So right now there's like a network layer of Firedancer that's currently in production, fully running. But then there's also this other, you can kind of make it deeper and deeper into this Firedancer ecosystem by adding these extra things in. Sorry, I don't know the specific technical terms, but it's the important one is apparently coming in sort of the next 6 months. We should see it coming out into production. So that'll be good. Not only it should make running a validator cheaper, it'll also create disparate set of validators. So if there's a bug in one, we can, it'll be okay, or not be okay, but at least not every single validator will go down. So I think that'll partially solve the issue. Really, it seems to me that Solana need to do something about the fact that this high running cost of a validator, having to post a transaction to every single block, just seems it's untenable basically.
So how many Solana validators do we have?
Right now it's 800.
It's about
800.
801 by last count.
Look, it's not that bad. It's still pretty decentralized. Obviously, it's not as decentralized as Ethereum.
Yeah, it's not existential.
But if you look at Base, that has one sequencer, Solana is far more decentralized.
Absolutely.
But how many of those validators are owned by one entity, though? I think that was the point as well in our article.
I'd be surprised if one entity runs more than one validator.
People are sort of coalescing around a smaller set. Something like Marinade Finance, they run their own. There's like a bunch of sort of validators that you can connect to. Obviously, when you're using your Phantom wallet or whatever, and you decide to stake some of your Solana, you have to choose one of these validators. I think you can get it to auto choose.
You can actually just pick any of the validators from the 800 validators that are still live.
Yes, but I mean, if you were doing it properly, you'd probably want to make sure that they've got a good uptime and not getting slashed and all that kind of stuff. Talking about that, we had the Ethereum Fusaka upgrade come through about a week ago, or no, earlier this week, maybe Monday, Tuesday. We spoke about this last week, so there's not too much to add there. But what I thought was interesting was there was a bug that was revealed in the upgrade in the Prism validator.
Yeah.
And right now, Prism accounts for about 25% of the validators out there. So 25% of Ethereum validators just fell flat in their face and stopped validating and got kind of, excluded from the validator set. Have we ever seen anything like this before? You're aware of?
I can't think of it, no.
Because
there were bugs that caused mass slashings before.
Yeah, right.
But this is why they have diversity in clients.
But it was almost lucky in this case, right? Because if you have the way that the protocol works is if there's less than 33% of validators doing it properly, finality is kind of okay. It's not an issue. Over 33% and finality is at risk. So blocks stop going through, transactions stop working. In the scenario, it just happened to be that Prism was 25% under that 33% rating, and everything was good. And everyone kind of just was like, "Nah, it's all good. Don't worry about it. Didn't even happen." But if Prism used to be something like 70 or 80% the validator set. Like they used to be the big boy in town. If it was that case, Ethereum would have stopped. That would have been a big deal.
Would have been, yeah.
And even now, so the current biggest validator is called Lighthouse, and it's something like 51% or something like that of the validator set. If that had a problem, we're done. We're not done, but like the network stops.
I don't think the network stops.
Oh, really?
You still, yeah. I mean, the blocks keep being validated.
I thought the
It's just
protocol
that-
stopped after 33% and says,
Maybe Skynet can
yeah, we need Skynet
can
up.
correct us there. Yeah.
Ethereum has approximately 1 million validators, but that does not mean machines nodes. There is approximately 15,000 individual nodes run by multiple validators. Yeah.
Yeah, this might change soon as well because of Ethereum switch to what's the transaction type 2 for staking, where you can actually stake more than 32 ETH
Yes.
per validator. So I think that will reduce from 1 million validators.
I feel like it'd be a slow reduction though, because most people will just be, they've already got their 15 validators going at 32 ETH. It's like, why change?
Yeah,
It's already working. Yeah. Anyway, I thought that was interesting. What else do we have to talk about? SEC innovation exemption. So the SEC have kind of come out. It's almost like a knee-jerk reaction to the CFTC going, "Hey guys, we'll regulate, we'll allow spot trading for crypto." SEC have gone, "Hey guys, we'll also do something cool with crypto," and they basically said, if you want to launch your token, you can get in this like exemption playground where you can.
Only for a short period of time.
They're only doing it until the clarity, no, not clarity.
Legislation in the US.
Yeah, the new legislation, whatever it's called, I keep forgetting. The crypto market something or other legislation comes out, because obviously that'll clarify exactly what is allowed and what's not allowed. But they basically said, yeah, look, you guys can play in a in a little sandpit, and don't worry about getting sued. We'll be good guys to you this time around. We promise. We're not going to sue everyone this time. Yeah, there's Paul Atkins talking his thing. Yeah, so this guy here on the screen is the SEC chairman. He's the guy who makes these kind of decisions.
SEC chairman.
Used to be Gary Gensler. Some of you might remember.
I miss Gary.
Yeah, Gary's now gone. He's in the private sector. Paul's a real crypto bull, which is cool. It's a bit too late. Kind of wish he was around before, but yeah. So he's basically said, look, don't worry about it. You should be able to like launch your crypto business faster now. You'll be able to play in this playground. They're kind of admitting that they got it wrong before, which is good. They're not outright saying it, but the fact that they're launching this thing sort of says, okay, look, we got it wrong before. Come back. Don't leave America to go build your token. Do it here in America. I feel like for years they chased everybody around, trying to like stop them, doing what it was, stop them from playing and launching tokens and doing airdrops and stuff. And now they're like, actually, no, we're good guys. And I mean, it's all good until someone launches, in the playground, they launch Trump's ball sack coin or something like that. And, this is like, you guys, they're going to shoot themselves in the foot, I swear. And then they're going to like, go the other way and back to pro regulation or pro enforcement. But either way, I feel like, despite price action, there's a lot of bullish news this week. Like, I don't feel like there's been like, the Solana thing's a little bit of a bummer, but it's not really a price action thing. It's just a cost of living. Yeah. Like in the Solana ecosystem, everything else has been pretty bullish. Like we've got we've got CFTC allowing stuff. We've got Charles Schwab coming online.
I mean, generally we've had a lot of bullish news over the last year.
Yeah.
So.
Yeah. So why is the price so low? Who keeps crushing? Is these Bitcoin whales? So Skynet. I'm a full-time pro validator for ETH. Roman's correct. Yeah, you can now do 2048 ETH per validator.
Maybe we can have Skynet on the podcast one day.
I mean, he kind of is.
I've been told that he's a very private person.
Okay.
Right.
That's all I'll say.
Well,
we've said too much already.
We value his input, that's for sure.
Yeah. Thanks, Skynet.
It's good to get fact checked. I love getting fact checked in real time, and I'm right.
Yep.
It sucks when I'm
He
wrong.
also said he was sent from the future to help us make us all rich.
Oh man, does he live in a Bitcoin citadel? Do you remember that? Do you remember that story on Reddit with the Bitcoin citadels? Where
some guy tipped like 0.01
Yeah,
Bitcoin
yeah.
and then he discovered it 50 years later. Or
Yeah,
something.
well, it's this whole thing where this guy comes from the future and says everyone needs to stop doing Bitcoin. We need to get rid of it straight away. It's like the future is horrible because everyone uses Bitcoin. Fiat money means nothing now. And he sort of takes to this logical conclusion. What happens in a pure hyper Bitcoinization civilization, basically.
Which you really can't have. I mean, the whole idea of Bitcoin is you don't want to spend it, right? You still need to have some sort of a fiat currency that you borrow against Bitcoin that is inflationary while Bitcoin is deflationary. You want to spend and borrow inflationary currency while you want to save in a deflationary currency. So Bitcoin will be the reserve, and then you have some Bitcoin, you borrow against it, and you use US dollars, stable coin or whatever, right? Some token that's ever so slightly inflationary, right, for everyday spending.
So do you need an inflationary currency for your GDP to grow, do you think?
Yeah, of course. You need to be able to print money you need to have leverage in the system to be able to essentially build factories, build business, innovate, send people to Mars, etc. Right? You need to have that leverage. Otherwise, the economy won't be moving as fast. You need to accumulate wealth. You need to then leverage it to invest in the future. If you can't borrow, then you won't be able to. Like, think about all of the small businesses, large businesses that need to borrow money to do R&D, to build a business, to innovate, to build something, to create value into. Yeah. Right.
Yeah. Okay. And in a Bitcoin only world, you can't. There's no reason for borrowing because why would you ever pay it back? I guess.
Well, if you borrow and then use it to build something, because Bitcoin price goes up, what you're essentially doing is shorting Bitcoin. And because you can't create synthetic Bitcoins, right? You can't leverage them. So you can only borrow a small amount. And once everyone borrows, then the next guy who has a great innovative idea won't be able to borrow, won't be able to build
no capital
it.
left.
So you need to have another inflationary token, or a token that you can essentially synthetically create more of to lend to people.
If we play this out to its logical, I keep using this phrase, logical conclusion, will it not just be that people won't accept that inflationary token as a currency, as a payment? Like if you think about something like, Venezuela, where they could do the US dollar or they could do the Venezuelan bolivars or whatever it is. No one wanted the Venezuelan bolivars because they knew it was going to be worthless the next day.
But
Is that not what will eventually happen?
No, because US dollar is that token. This is what US dollar is.
I know, but to Bitcoin, the US dollar is the Venezuelan bolivar. Like it is the inflating piece of crap you don't want to touch. And you like try and buy something. Some people are like, nah, just give me Bitcoin. I'm not going to take your Venezuelan dollar.
So if you think about it, right, Bitcoin is volatile day to day, short term. So it's bad for everyday transactions, but it appreciates in price over a long term, stable appreciation. While US dollar and fiat currency like US dollar is very stable day to day, right? Coffee today is $5. It will be $5 tomorrow. But over long term, it's inflationary. So coffee will be $10 in 10 years' time or whatever it is, right?
I guess my point is, though, that in a scenario where everyone has moved to this Bitcoin standard, any other currency will become hyperinflated.
Not hyperinflated.
Or
right?
inflated enough that people don't want to use it.
3% inflated, which
okay.
You don't want to use Bitcoin because if you spend one Bitcoin today to buy a car, that car tomorrow or in 5 years' time will be half a Bitcoin. So why would you pay more essentially for it now, right? You want to borrow against that Bitcoin to buy the car, but you want to keep the Bitcoin.
Yeah.
So you don't want to use Bitcoin for day-to-day transactions, and you don't want to spend Bitcoin. You want to accumulate it, right? You want to borrow against it to then go and like buy a house to earn yield or start a factory to earn yield.
Yes.
And then as that yield comes in, you want to reaccumulate Bitcoin again. So you do need...
I agree with the sentiment. I just think that inflation on any other currency versus Bitcoin eventually will get out of control. And yeah, maybe once the inflation goes above 10% or 20%, we're like, we'll start with we'll start a new other currency that people should accept. But I just don't see it.
You have to remember that inflation in a currency is caused by the supply of that currency. And this is exactly what you need. You need to have leverage in the system. You need to be able to print more money to give it to people to build factories, innovate, and start their business to grow the economy. Otherwise, we would still be, riding donkeys.
No,
nobody could have.
I absolutely agree with you. I'm just nervous about.
Don't be nervous, Nick.
and probably I'm nervous about something that I'll be long dead for, or at least I'll be uploaded my consciousness into a machine by then. So I can probably just live in a Dyson sphere.
Your wife said no to that.
Oh, she did, didn't she? Well, if she's not going to upload, I just have to outlive her, and then immediately I upload. Anyway, I mean, we're just guessing about the future.
Of course.
Super interesting to see.
If anyone can predict the future, that would be very wealthy. And
Skynet.
And Skynet points out that currency has the unique property that doesn't trigger a CGT event every time you tap your card.
Yeah.
Which is very true.
That's so true. Well, yeah, hopefully by that point, Bitcoin will be a legal currency. But anyway, I think we've gone through a lot of stuff today. Thanks, Roman, for...
It's been fun, Nick.
Yeah.
Thanks for inviting me.
Thanks for sticking around. Thanks for taking on the role of Lee. I mean...
Lee's still here.
Is Lee chatting?
That's him out front of Movie World.
Yeah, Lee. Look at him. Oh, mate. Is that an Independent Reserve hat he's wearing?
It is too.
He's doxing himself. Oh, no. But he's wearing my sunnies. Look at that. So I guess I'll be back next week with Lee probably, unless you want to join us again. Maybe you and Lee can do one. I don't know.
Maybe not next week.
No. You're a bit drained. No worries. Anyway, thanks for coming. Thanks everyone for joining in. Hello, Skynet again. Did we have any other people chatting on? Was Skynet?
Oh, just a few people fangirling over Skynet.
Oh, nice.
The ultimate.
No, very, very welcome. Thank you, and see you later.
Thanks, guys. Bye.
Lee and Nick with the moonshot flow. Dispatch live, let the market glow. Crypto vibes where the numbers show. To the moon we go, let the podcast blow. Digital coins, we dissect them.